Good evening. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening of Wednesday, the 8th of March, 2023. And as I said to my other two, happy birthday, Mom. She's not with me anymore, but on her birthday, why not? I miss her. So as we take a look at what's going on, I've got to give everybody fair warning. You know, if you're a stock picker, that's one thing. But if you're an index trader or an ETF trader, you got to be careful over the next 48 hours. You're going into a jobs report that can do anything. It can set the Fed off to a 50 basis point hike and other ones of that size to come, or it can keep them at 25 for longer. It's a big difference. There is no chance that this report that comes out takes the Fed and says, oh, they're not going to raise interest rates at all. The question is, how aggressive are they going to get, and why are they going to get that aggressive or lack of aggressive? It's going to be one of those. The Fed chair did a great job today again of being very clear. Number one, he was attacked, rightly so. The Fed has a terrible track record of not keeping us out of a recession when inflation rears its head. Simple. The Fed, when you look at it, and they say, well, they'll just, they're hoping to get unemployment if it goes up, no higher than 4.5%. Well, if you look at history, a 1%, that type of jump, no, history shows it goes more than that amount, all right? So that's going to be painful, and we heard about talk on that. So the key is, and I agree with our Fed chair, I think he wants to stay moderate. But if you get 400,000 jobs, new ones, instead of 224 that you're looking at, if you don't get revisions down in the 517 from last month, you got a problem. And, today you saw ADP number go through the roof, all right, way beyond the expectations. And then you saw the JOLTS data. It came down a little bit, 200,000 job openings. That's not very much when you had 11 million. You're down to 10,800,000. And if you read the beige book, which I wrote about, and I put all the excerpts in tonight's full research for my subscribers, there's a theme there. Other than New York, they're finding that they can hire people in many parts of the country. Wages aren't falling. They're just not going up very much. In other words, we're plateauing. That's good. That's not a bad thing. That's a very good thing. But I don't believe that come spring and summer, you're going to see big drops in employment, because I think the service industry will absorb what you're going to lose in tech or some manufacturing, if you will, and pick it up because we're all going outdoors. I mean, think about it. In the United States, yeah, we have parts of Texas and we have parts of the South that are very moderate in the wintertime, but the vast majority of us get cold. And we can't wait for spring and summer to go out, and that requires services. And those services are going to be hiring like there's no tomorrow. And as they do that, it keeps the economy going. So, do I want to go through with big positions into the jobs report Friday morning? I'll tell you ahead of time. Absolutely not. I'd rather go have breakfast somewhere, see the number, let everybody step over themselves in panic, and then pick up the pieces. That's my style. In looking at the S&P, we've had a trade top, a trade bottom, and you can see you're just sort of hanging here. Sorry about leaving that cursor on, but not going to do my monologue again. It's enough. Got the higher highs, lower lows. There is no trend there. The same thing in the S&P, the same thing in the Dow, same thing in the NASDAQ, and the same thing in the Russell, by the way. When you look, you went up to the 18-day average, fell. The big support's very clear. The support in the market's the 200-day average again, and the 100-day average, and the combination of the Bollinger Band with it. Remember, in a Bollinger Band, you will trade within the black dashed lines 95% of the time. And when you hit them, you often back away. You can keep hitting them, but you stay within them 95% of the time. So you take money off there. You can add positions, take money off, whatever your heart's desire. If you look at SPY, back here you hit the 200-day average, so we'll see if we can come back to it. And in gasoline, I think that the trade is going to be buying here, nibbling for the first time. Now, I wouldn't go very heavy. It's only March 8th. It's still very early on. And if you get a bad jobs number and they come out and they say, oh my God, we got to go 50 basis points. Well, one of the things that'll get hurt is driving, other things, because you keep raising rates. That's like a tax on everything, right? You know it. I mean, if you get a credit card, take a look at what you're paying, just to give you an idea. NVIDIA, this market's trying to embed. This is good action. Both numbers over 80, both over 80 on Tuesday, and both over 80 on Monday. So if you've taken my enhanced Bollinger Band course, and I pray you have, the market's setting itself up for buys according to the course. There's a way you do it. I'm not going to give it to you for free here. And you keep buying until you lose that embedded reading. Let's see if I can get rid of that and not have to do this again. Okay, did it. In Tesla. By the way, I never did that, so now I've learned something. Lower highs, lower lows, riding it down. Why is this happening? Because they got a manufacturing glitch, all right? They didn't put a bolt in on a steering column in some way, and steering wheels are coming off. Serious? Absolutely. But a problem with the overall car? Nah, something in production. They'll get it worked out. How many other cars get recalls because of things? I'm not saying it's not important. I can't imagine driving at 80 miles an hour, 70, 60, and the steering wheel comes off in my hands. I'm a pretty good driver. It would panic me. XLF, higher highs, lower lows, back into the 100-day average, looking for support. XLI, all right, caught in the sideways action. You tested the lower band. You're now testing the upper band, and you immediately pull back to the neutral area. This is the classic example of what I teach in my course. When you whipsaw back and forth like that, learn to run away from those markets. See, they're going to make you do the wrong thing. They're going to make you buy, and then if you, under the 18-day average, if the market keeps falling, where are you wrong? Where do you put it in? You want to buy breaks when you're in an uptrend, not when you're in a downtrend. And sideways action makes you do the wrong things, and you pay a penalty. SOX is the same thing. You don't think that's sideways action in a Bollinger Band, in a fairly narrow band? I do. Okay. XHB, same thing. You're stuck here. You have a lot of markets that have suddenly gone sideways. Pay attention. Very dangerous when that happens because it's trying to suck you in and then you don't get follow through to the upside or downside because that's the nature of a sideways market. This was a bear market rally. Bear market because you were under the 18-day average. You went up to the number that the market had been staying under primarily. For 2 days, you stayed over it, and then bang, you've let go back into what? Back into the bias down. But are you trending? Not really. You're just drifting is what I want to call it. In gold, well, if you're going to kick up interest rates come Friday morning because of the jobs report, this market won't survive that. This market will get hit and hit hard. Why? Because why should I own gold when I can make 5.5% on a 6-month T-bill? I mean, sometimes in your life you're given no-brainers. That's the no-brainer. The stock market, individual stocks, is different. You're trying to pick up value for years, but when you're trading these ETFs and you have a short horizon, understand what you're fighting. Silver just can't lift itself up. So the industrial metals are no good. Copper's under pressure, but not trending. It's caught in very much a sideways pattern right now because it's disappointed in what China has been offering. TLT, why is the back end of the notes and bonds up? Because the Fed's not playing there. The game that the Fed plays is the front end. That's where they have their influence. And that's what made the 2 10-year spread move from, in the summertime, I said it was around 50, 40s, and I said, I think it's going to 100. I said it, I remember, in June. And the market has come back up. My videos are there. Go look at them, okay? They're still on YouTube. And you can see you're fighting a 100-day in that. Why would I want to be in TLT, BND, or any of that going into this jobs report where it can be a violent reaction? It could be no reaction. I can come in right afterwards without risking my soul. It's that simple because you get wrong in these and it screws you up for all the trades you should be making. Has that happened to you? How many trades have you missed because you're fighting with something you know you shouldn't be in it, and it's just completely made you crazed in the head? Same thing here, UUP. It's bullish. I'm bullish the dollar. You're bullish the dollar, but you're in a Bollinger Band. If I buy it over that, that's what they build the guys on Vegas. They're saying, hey, come on, play it. We're going to give you a 5% payout. You will be right 5% of the time, but I'm going to get your money 95%. I don't want to play that game. And the same on being short in the euro. It's not a chance to buy it. It's where the smart money comes out of the market if it was in a downtrend, and you walk to the sideline. So what do I want you to do? I want you to take your cursor for a minute, move it top up here. We have a bunch of free offers, including access to my twice daily written newsletter, my special updates. They come to you, all right? People pay me for this, a lot of money each year. I'll give it to you free for 2 weeks. How do you get it? Go up here, say free offers, go in there, sign up. Take the Linn one too, because you're going to want to see that as we go into these reports. I'm Ira Epstein. You have a great day. I will catch you all in the morning.